What's up, guys? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm doing a Ravencoin price analysis, and by request, I'm going to talk about where I set stop losses, when I use them, and what I use to indicate where I should set a stop loss. So with that being said, guys, stay tuned. I want to tell you all about it. All right. We know the drill here. I am not a financial advisor, and this is not financial advice. I enjoy doing technical analysis. I do it for fun. I do it for educational purposes and informational purposes only, but I am not your money manager. Trade at your own risk. Do your own due diligence. With that being said, guys, if you like the channel, throw me some support. Throw a comment out there. Like the videos. Subscribe to the channel. Hit the notification bell so you know every time I make a video. Also, check out the Twitter feed if you're interested in also knowing when my videos go live and whenever I post potential pictures of trade potentials and breakout potentials when I don't have time to make a full video about said breakout. With that being said, guys, we're going to hop right into Ravencoin. Today's been a strange day generally. The market just saw a little bit of a dip, but it seems to be recovering pretty well. And a little bit, I mean like a 1 or 2% dip that kind of just dropped very quickly and picked right back up. But Ravencoin right now is in what I believe to be a very, very bullish pattern. You see, we are making an ascending triangle. That being said, our resistance is staying same. Our resistance is staying straight line. And our support is growing. Our support is building up. And that means that the buying pressure is starting to overwhelm the selling pressure. Every time it tries to sell down, it can't sell down as far as the last time it attempted to. This was one a really weird wick, so I'm going to leave that as an outlier. But in the general sense, the buying pressure has taken over quicker and quicker every time the selling pressure tried to take over. It's a great sign. This is typically a continuation pattern for an uptrend. However, we know that we were coming out of a downtrend. So this ascending triangle is also a reversal pattern for a downtrend. So just to make sure we are aware that this is a reversal pattern for a downtrend, and typically it is a continuation pattern for an uptrend. So I'm going to monitor this closely. I'm going to watch for a break of this resistance, a clean break. You see, we had a couple wicks break it, but they sold right back down. And typically, every time it broke it, it actually became a selling wick. It actually became a sell candle because the pressure came down so hard from the sellers once they got close to that resistance. So something to keep an eye on. We want to finish a green candle above this day or above this resistance, check a retest, and then wait for blast off. That's what I'm looking for with Ravencoin. Ravencoin is a very quick analysis here. All the indicators are low, they're down, they're ready to pump up. Even the 4-hour RSI is only at 46, it's below 50. So RSI below 50, ready to pump. The MACD is really, really sideways here. You see there's not much movement up and down. Very much a consolidated tight MACD, excuse me. MACD is really sideways, MACD is really consolidated. It's ready to blow. The only concern right now is the bears are laying down currently. The bulls are coming down. The bulls, you want this to jam back up. You don't want this to come down because then the bears take over. So that's the only concerning thing on the 4-hour, but on the daily, it looks like the bulls are down on the daily, and they'll be the first ones to jam back up. So when they jam up on the daily chart is when you can see some really good buying pressure when the bulls jam up on the daily chart. And on the daily, the RSI, again, the daily RSI is at 44. We're under 50, so we have tons of room to grow. Now, it's a simple Ravencoin price analysis there. Now I'm going to show you a couple recent moves and a couple recent moves where I would put stop losses had I traded these moves. Look at VET. Now, VET looks like it is in a build-up phase right now. It's building up and it's staying really close to this resistance. You see, it had came all the way down to support a couple of times. And it looks like right now it's not trying to come back down to support. It's in a build-up phase to this resistance, which means I think a breakout is going to be close. I think we're very close to a breakout here. Now, if this breaks out and you buy a retest, you know, if it's somewhere around this area here, and you buy a retest of 12 cents, where do you set a stop loss? Say it comes out and it retests and it just keeps coming back in. Where do you stop? My train of thought here would be this red line that I drew. It has been a support 1, 2, 3, 4, 5 times, 6 times now. And it was a resistance 1, 2, 3, 4, 5, 6, 7 times a resistance. And this is a line where if it goes below it, it's going to touch the bottom again. If it goes above it, it's going to touch the top again. This is my line. This is where I would set my stop loss if this breaks out and retests and it falls back into this channel. This would be my stop loss, 1153. Right, that's where, or I'm sorry, 1154. That's where my stop loss would be for VET. If this were to break out, if it goes below this line, it's going to retest the bottom. It is almost guaranteed. Now we see there is no guarantee. There is no 100%. But you want to, as a trader, you want to take probable over possible. What is probably going to happen versus what is possible to happen. Almost anything is possible. What is probable is that you have recent history of going below this line, you touch the bottom. You go above this line, you touch the top. You go below this line, you touch the bottom. You go above this line, you touch the top. You go below this again, you don't want to wait this trade out all the way out to the bottom. Now, this is with me on margin where I can take a 4% loss or 4.6% loss. I can't take a 10% loss. A 10% loss is a 100% loss on margin. Can't take it. I can take 4%, I can take 40, can't take 100. If you're trading normally and you say, you know what, I missed this, but it's going to come back, then it's, what is your time worth? What is your time worth? What is your money worth sitting sideways in the market as opposed to being pulled out at a small loss and getting into something else that might be a big gain? That's your own risk management. That's your own money management. I can't tell you what to do there. I can tell you what I do. I'm going to tell you that I'd rather get out and lick my wounds on a small loss than to sit and wait and wait and wait and wait for the next rise up. Because I'll tell you now, the odds are that it touches bottom again, it goes through bottom. Odds are if it touches bottom again, we hit this 618 line here, and we're at 9.5 cents. We zoom this out a little bit. The next, I mean, we broke the 50 line. We sat around the 50 line here. We're very close to it. If we break this out of this bottom, the next major support line is going to be here. It's going to be the 618 line at 9.5 cents, and that's not unreasonable. A 618 retrace, it's not unreasonable to hit that before we rise back up. So again, manage your risk, manage your money. EOS recently broke out of the top of the channel. We had this parallel channel and it went up and it kind of got a weird, kind of stuck here. Look, 1, 2, 3, 4, 5, 6, 7 times it hit this line here. And I drew this red line afterwards, obviously, because we broke out here. And this would be the retest you would want to buy. And you would want to go up from there. But if it comes back down, it comes back in. If it comes back in, if it goes below, this was a strong resistance. 7 candles on a 4-hour chart. Hit this without being able to break it. If it falls below that, there's going to be a resistance again, and we're likely to go back to the bottom of the channel. This line here, 486.5 is where I would set my stop loss if I bought this. If I bought this retouch or this retest of the channel, and we're waiting for it to go up. If it were to fall back in, this is where I would set my stop loss. So here, if it feels like it's a really tight stop loss, 1.73%. So for me on margin, that would be a 17% loss. But the potential is that that becomes a strong resistance again, and we go down to the bottom, in which case I've now lost 90% of my money. So there's a difference, guys. And this is particularly important on margin. Remember, if you're not on margin, you're not at risk of getting liquidated. You're not at risk of losing all of your money in your entire account. So again, this may not be as important to you, but for me, I'm looking for recent support resistance lines to where I know if it falls below again, there's going to be a potential area where it will be a struggle to get back above it, and I don't want to wait that out. It's a matter of waiting versus holding and timing. If I did not time my entry correctly, I get out. And I say I lost this because I didn't time my entry correctly. And even the most probable trades can go sideways, can go wrong. So don't beat yourself up for it. Get in, get out, take as small of a loss as possible, maximize your gains, minimize your losses. That's the name of this game. There is no honor in dropping 15, 20% just to wait a month for it to come back up. I mean, that was just a month of you having your money tied up in something that wasn't making money for you. That's not smart. So with that being said, guys, again, if you like the video, hit the like button, subscribe to the channel, and don't make a comment. Let me know what you think. Let me know what you think about stop losses. Where do you set a stop loss? Do you use them? Do you believe in a stop loss, or do you feel like it's always a way for people to push people out of the market? I'd like to know what you think. As always, guys, until next time, peace.